Come, let us prepare, make some profits today. So I was mentioning we were in a bullish formation that we cannot ignore, and the W formation really played itself out. Now, if you watched yesterday's video, mentioned about this cup and handle forming, and thereafter this W formation that formed. And this W formation was built upon the 5-day moving average as support. If we take a look at the daily chart, that's exactly where it was at 396, and that's exactly where we bounced up on the day. So based on that information on the bouncing of 5-day moving average, I sold some puts, and the next boost that we received after 2 p.m. was when the Qs broke through the 5-day moving average as some sort of support, and we were also paying close attention to that level. And once the Qs reclaimed the 5-day moving average as some sort of support, and that was when the SPY bounced off as well, coinciding with our orange 398 level, which was the protector of this range. And we had the last bounce up from 2 p.m. onwards. Now, throughout the trading day, we were firmly in a buying channel right here, and we did not threaten with these two levels here. We never traded below it. So I just want to run through some of the psychology of trading, because firstly, you will be hard pressed to want to be taking puts for some sort of reversal, and rightly so. Because let me run through the few reasons why you may do that. Now, firstly, we are near the top of the range. Now, secondly, you're thinking there is a possibility of a higher risk to reward ratio. And thirdly, there appears to be some sort of weakness as we were consolidating at this top of the range. Now, valid reasons. But if you are a newer trader, you have to observe the trend. And in this case, as long as we are not breaking through the buying channel, you can expect buying algorithms to ambush you at the bottom of this trend line right here. And that's what we saw. Buying algorithms, especially with larger volumes, near to the bottom trend lines. Secondly, if we do not break through the major levels here, especially this pink and this purple as we identified it, you can be sure there will still be buying algorithms protecting this range. So you cannot be too sure that if you were taking puts, you will have a free ride down just yet. So in this case, how should you be taking puts, especially at a level like that? Now, firstly, if you have limited buying power, you have to wait for confirmations. You have to wait for, firstly, this buying channel to break and the major resistances to be formed. These were previous supports. You want them to turn into resistances. So in this case, if we break through this and we started retesting purple, 396, for example, you see that the sellers are trying to drain off the buyers, and you form a resistance on this 397. Now, this is a good head and shoulder formation, because basically you're trying to drain off buyers from support level, and your resistances becomes the base of where your sellers are building the strength to break through that support. So this is exactly what a head and shoulder pattern is supposed to do in terms of price action. So if that doesn't happen, you don't commit your puts. Now, if you want to be taking puts, you don't just want to be calling for the top. You want to be taking that juicy risk to reward as you are planning your trades to be. Now, if you have a juicy risk to reward, why are you risking your puts over such a small range when you can wait for more confirmation with just maybe half a point more? So you see, part of your mind is trying to tell you to call the top, get a spectacular trade, but you lose that logical conclusion that you can wait a little longer and that risk to reward will still be very lucrative. So you take unnecessary risks with less confirmation just to try to catch the top. It's not worth it. Now, however, you still can take puts and get into early position. As I would mention, my way of taking it is to obtain a free ticket. Now, you noticed that puts are also very strong moves right at the top of the channel, right? We still get strong moves for puts right here, because as much as this is a buying channel, the chart moved between the top and the bottom trend lines in full motion. until, of course, we cleared this orange level here, which I will discuss this later on. Now, in this case, if you took your puts right at the top here, you knew that there is going to be buying algorithms right here at the bottom of the trend line. Now, this is where the algos are allocated to be prepared to buy to maintain this channel, isn't it? And this is the reason why we chart channels. These are just the algorithms in action. So if you're taking puts right here at the top, you have the opportunity to protect your trades right here. And that's exactly what some of us did, which is great. Now, when you open a trade here, you protect your trade here by closing and taking partial profits. And as I mentioned, in such a chop, in a low volume trading day, you have to leave smaller runners. And this means that you assure more profits while leaving small runners for this possible lucrative risk to reward. Now, in this case, you protected your trade and you're supposed to be fine, right? So you took puts, and these puts are just stress-free and risk-free to be prepared for the way down. Now, especially when we were chopping right here in this range for a good 3 to 4 hours. Now, there's just no way you can maintain it, right? And so this is also one reason why I sold 398 calls right here and managed to close off almost 30% of the value before this last push at about 1:30 p.m. So that was also a really good trade. So you see, the next time you want to be calling some sort of reversal or playing puts in a trend day where it's going up, you have to reassess your psychology and prepare your trading plan. Don't just be calling for the reversal. There are nuances in doing that. There's actually a strategy and a plan behind that. So you have to think of it that way. Now, for me, it's always about getting the free ticket because I want to be as stress-free as possible. Leave it as it is because it's almost impossible to maintain your attention to be focusing for a few hours, especially in choppy days like that. Or either that, you start selling options and just leaving it as it is, extracting premium while the market chops itself. But if you have a small account, you have to wait for confirmation. Focus on one structure. Now, if you're waiting for the market to head down with certain risks to rewards, so be it. Wait for your confirmation. And if the confirmation doesn't come, there's no loss. You don't take a trade. You don't expose yourself to risks. You lose nothing. But you were just preparing for that possibility, and the confirmations never come. So there's no need to be forcing a trade if you're not prepared for it. So as I mentioned, if you're not prepared for this, so be it. There's no loss for you, and you don't force a trade to put yourself in a risky position. Now, that being said, there is also a way to be catching calls in this trend day, right? So there are a few indicators that happened. Firstly, we were always at this buying channel right here. Now, whenever we are always at this buying channel, you have to pay attention for support levels that formed within the channel. So in this case, you see this orange level here. It formed within this buying channel. So this will tell you this is a strong level within the buying channel. And so you have created multiple support levels within a possible trade setup. So firstly, if this bounces off like that, I would take calls with stops here and secondary stops right here where the bottom of the channel is. So you have double protection for your calls, and that's good enough for me to be taking some calls here within the channel as well. So pay attention the next time when you see major levels, whether support or resistances that's forming within the channel, and that will give you a very good setup because you have primary and secondary stop losses to be taking your trades. Now, secondly, this is built on a very strong support level, as I mentioned, which was the Q's 5-day moving average that we had to pay attention to. Now, obviously, we want to first see whether there is some sort of stop hunt and whether there is some sort of rejection that comes from clearing this major level. Now, the rejection tried to come. You can't say that it didn't, but the buyers defended that level and reclaimed it. So this is another technique that you need to see, and that is when we break out and retrace before we push again. So this is a breakout and retrace. This is a very common trading technique that you have to pay attention to. When this happens, you take the retracement, and in this case, you take the calls. Now, Qs gave this clue, but the SPY was much more obvious because it was based off a major level that we knew was going to be important, and this was based off this support right here. Now, apart from this support level, if you wanted to catch another call, will be the breakout of the channel. And once again, this is the same technique that if we break out of the channel, we base it back off the channel, certain retracement again, you notice, right? This is a support level and also outside the channel. So we break out, retrace back to a support and also the outside of the channel, and we pushed out from here. Now, this was late in the day and power hour, so only possibly a 1 point move, but good enough if you see certain techniques. So it's all about identifying and extracting profits from setups that you see right here. So the question is, it really doesn't matter you're catching it up or down or you're missing the big moves. Hey, if you manage to just take puts here, you get this 0.7 point profit. Take puts here again, take decisive profits, and you take puts again and you take decisive profits. Taking this 3 trades is so much better than just taking this 1 trade here and getting chopped. So it's not about catching the big moves. You have to remember that trading is never about that, because you can never finish catching all the moves in the charts. Now, what you need to be doing is to prepare a plan and know how are you extracting profits from this. So if you missed the 5-day moving average, that will be the simplest trade of the day. You took your calls at 5-day moving average, and thereafter you will just be nurturing your trade because they will never threaten. So in this case, it's much easier to maintain trades as long as you have a trade that's already open. So this is an easy trade. But if you miss this chop just doesn't come that obvious to you. And in that case, you have to be trying to extract profits from what you see in the charts. Mostly chop. So that's the best way, is to sell your calls and your puts and extract value from this in the 3 hours that it chopped. And thereafter, maybe grab your free ticket. You still get good profits before taking that free ticket that never materialized. But that's fine. You see the support here, breakout, retrace. And based off support, especially in the buying channels, always remember what I mentioned. When you have primary and secondary stops available, that's a good trade for me to take. So that's also one technique, right? And also another technique will be this breaking out and retracement. So yesterday, the king makers were the 5-day moving average for the SPY and the 5-day moving average for the Qs, which coincided with this orange 398 right here at this point level here. So now, what do we expect to see? Now, firstly, SPY, we are so much higher than the 5-day moving average. This is a very clear support level, but we want to pay attention to the Qs because this is still very precarious, right? Because it's not cleanly on top of the 5-day moving average. We want to see if the Qs continue and is being led by the SPY. So when the market opens today, pay attention to the Qs 5-day moving average and whether we base it off. Now, if this happens, it will be very bullish. You have to pay attention to that. Now, the top of the range, now take a look at the Bollinger, right? And I mentioned how the Bollinger is a trend indicator, remember, not a trade indicator. And we still have so much leeway up to the top. And we mentioned how 403 is the protector of the gap. And we have a gap, juicy gap up till 408. And we want to see if it coincides with this top trend line that we have. And if you remember this top trend line here, this top trend line rejected at every instance whenever we tested it, right? Since the top all-time high at 480 here. So this top trend line is extremely, extremely important. You have to pay attention to that. And we want to see if it coincides with the top of the Bollinger Band as well as the top of the gap at 408. So it's still a possibility. But given that we are near the top of the range, I do expect that there will be certainly some sort of retracement before we retest this gap, especially when it's the holiday season and low volume coming ahead. So we want to be seeing if this orange continues to turn some sort of support here. So this will be the support level that I'll be paying attention to, right? We do have 401 here and this 403 resistances here. So you have to pay attention to that as well. Now, this is a very important level now. 397 and 398 orange. Now this support level will be the protector of this range here where we had the W formation. So if we do break through below here, this would be the trading of a range. I expect this to be a very strong resistance if we reject the range here. So pay attention to where the 5-day moving average opens for the Qs, because this was where it was for the Qs and we based off it. So I expect that the Qs 5-day moving average should coincide with this level, and we want to see if there is some sort of retracement to push us ahead. So as I mentioned, this is still a bullish formation and the bulls will have till 403 and 408. Now, several events happening later at 1:30 p.m. Eastern Time. There will be Powell that's speaking. Here's a guest speaker somewhere, so we have to pay attention to that. And 2 p.m. we have the FOMC meeting minutes that will be released. Now, these are just possible catalyst events, and I do expect big money to be guising their moves behind these catalyst events, as I mentioned previously in another video, that in order to escape SEC detection, they will obviously prepare their trades and hide it behind these catalyst events. So there is plausible deniability if being questioned. So as much as these events may not provide the catalyst to push us out of range, we should expect some large volume behind them, and not necessarily because Powell said something or the minutes contain something. All these will become confirmations and justifications later on, but it's just their way of hiding behind certain catalyst events. So very simply, you realize trading, as much as it is about catching the trends, sometimes you're left in positions that you just have to prepare the trades for yourself and just extract profits as much as possible. Now, if you deal with that sort of psychology instead of wanting to catch the big move, then you will always not have to worry about losing the trade. You will always come up with some sort of profit, small or large. Now, that psychology can only be attained when you know you have the skill to do this every single day, and basically you're just logging into the market and just taking your fair share of your profits every single day for the rest of your life. And when you can develop that sort of aptitude, you're not worried about catching the big moves. There will be another trade tomorrow. Your job is just to enter the market. Have fun, right? I see profits here. I'll take profits there. Why not? It's my way of just nicking something off the market. And it's not about catching the big moves. Now, you worry about catching the big move only because you don't have that mindset of abundance. You worry that this may not happen again, but it will almost every other time in future. So once you prepare yourself, just as long as you ensure that your risk management is in place, I guarantee you will catch big moves along the way. Not 100% of them, but good enough, more than half of them in your lifetime. But most importantly, you have to trade with a plan and not just be hoping for the market to do what you think it will. And case in point, when the buying channel is firm, when the support levels are firm, when the 5-day moving average is not being threatened. Now, if you're just telling yourself this is going to dump and you plan it accordingly like that without managing your risks, you're going to be in deep, deep trouble. So don't hide behind that mentality by saying, oh, I missed the big move. The point is not that you missed the big move. This isn't that big anyway. It's just a 2-point move, right? But the point is you have to remedy your mentality, and that is hoping to catch the big move, and that is hoping for the market to do what you are planning instead of the other way around, planning what we see we can do from the market. So just another point here, right? If you took puts right at the top of this resistance, now you could still protect the trade with a 0.5 point move, right? This is, right, in perspective, the full range of the chop that we experienced in 2 hours, right? So this is a 2-hour chop here, and this 2-hour chop is a 0.5 point move. So even if you took puts here, you could enjoy the full range of that. Literally within 15 minutes, you can protect your trade or even take more decisive profits. And sometimes that's good enough, right? Even if the trade does not materialize, even if you did not see the support to take calls. But if you took this, you did not protect your trade because you're just hoping that it goes down, then you're not respecting the structure of the market, and the market will burn you. This is what's going to happen. You're going to lose a good entry, right? You took a good entry. So why waste it? Protect your trade. Take some profits first from that good entry. Reward yourself with that, right? And leave small runners thereafter for that. So when you change your mentality about trading, it becomes so much more enjoyable, right? So don't give yourself that sort of unnecessary pressure just because you want to be fighting the market to be right. Now, it's not about being right and wrong trading. Always remember that. Now, the market is just going to do its thing every other day. Every day it's going to just be doing its thing. It doesn't care about you, doesn't care about me, right? So all we got to do is figure out what it's trying to do and just ride on it, piggyback on it, right? Sometimes we see good trades, and that's fantastic. Sometimes we see trades that are not that great. We still can come up with profits for it. Why not? So develop that strength. That's what we want to be doing here, and that's why trading can be really fun and a possible lifelong activity. Because when you learn how to extract profits from the charts in any way possible, right, you can do this for a lifetime. You don't have to be waiting for trend days. You don't have to be waiting for certain indicators to align. You can always just be taking profits as and when you want to. Right, so thank you very much for watching, and I will see you closer to opening bell.